Good morning, good morning, good morning, everybody. Welcome to for May 10th, 2023. This being, Premarket Prep, if we rebranded. This being our daily session where we go over all the news, notes, data, economic calendar events, right? Trade ideas that are necessary to keeping you consistently profitable here in these ever volatile markets. I'm your host, Adam Holland, stock options expert market strategist, and we're here to invest that 1%, right? Right, yes, exactly. 1 1 1 1 1. That is the goal. Make sure that if you're watching live, watching via replay, and joining us from the future, welcome, number one. And number two, make sure you throw a one in the chat, signifying your intention to get 1% better. Sharon, LOL. Yes, yes, yes. I did. I saw the last name, so I know whenever I see that, those Win and Holland names are interlocked forever. So yes, great to have you here. Yes, Coco, good to have you. Carla, good to have you. Good morning, everybody. I hope you had an amazing morning. For me, I got up, right? Got my prayer in, got my running in, did not feel like doing it, right? But did it anyways. I feel like that is important, right? Because again, the battle is won before the bell ever rings. Getting in that right mindset, that killer mindset where you are patient yet ready to execute is important. Vivian, good morning, right? My partner in crime, legal crime, right? Market crime. But overall, just the mornings are so important, right? Putting in that effort pre-market is huge. So I want everybody to come here rested, restored, ready to take on the day because it has been tough market conditions, right? And I just want to really let everyone know, number one, to have grace with yourself because sometimes the market comes easy to some people, and for others, it can be a struggle. And that doesn't mean that that the market isn't for you. It just means that you have to be even tighter when it comes to the mental game outside of trading, right? When it comes to sticking to your system, right? When it comes to focusing on a strategy and perfecting that strategy, right? Either trading the trend or you trade breakouts on patterns and focusing on those, right? Focusing on a specific time frame, right? Being malleable, right? And what's the word? Being willing to shift with your goals and to adjust your goals. A lot of people like to attach a certain monetary amount to how much they want to make per day trading and things like that. But to be honest, again, like I said in one of my reels, it's process over profits. And when you have a tough market like we've had with all this chop and everything going on, it's tough for you as a new trader to say, I'm going to make this amount per day. When some days as a new trader, you should just not be trading, right? So it's very difficult because it's like a farmer. If a farmer said, I'm going to harvest 400 ears of corn a day, but he's farming in a drought, no matter how hard he tries, it's going to be very hard for him to harvest the 400 ears of corn a day, right? 1,000 ears of corn a day. You need to make sure that you are adjusting your goals based on your expectations of market, right? That's why I always come in here. Come on, camera, lock in with me. So I always come in here and I say, hey, right, this is what I expect. Yeah, like Vivian said, having the ability to pivot. You come in and you say, okay, this is what I expect out of markets this week. I expect markets to behave this way. So then why don't you also expect your profit for that week to behave that way as well, right? And you expect markets to be choppy, but you still expect to bring home $1,000 a day. Those two things don't add up, right? That's like if you leave for work and you're like, I expect there to be heavy traffic, but I should get to work in 30 minutes. You can only do so much, right? So have grace with yourself, understand and make sure that your expectations for yourself are lining up with your expectations for markets, right? If we say, hey, the market is going to be crusty, you can't expect yourself to be hitting home runs all the time, but you do need to control what you can control. And within that, right, make decisions that are best for you. So I think it's just very important to give yourself a lot of people don't give themselves the time to be successful in markets, right? They don't give themselves the time. It takes a certain amount of time to be a good fry cook, to be a good plumber, to be a good electrician. People will trade for a few months and say, oh, I'm not so good at this. This isn't for me. What if you babies try walking for a few months before they get it right? What if they just said, hey, this walking thing isn't for me? They would never walk, right? So I think it's very important to recognize that you are operating in an environment that's unlike any other environment that we encounter as humans. You have to give yourself grace. If you had a new job and your job was to work in space, how long do you think it would take for you to be good at that job? How long do you think it takes astronauts to get good at literally working in zero gravity? Years, right? So whether you're frying fries, unclogging a toilet, wiring someone's electricity, it takes time, right? So give yourself grace, right? Imagine if you're trying to be an astronaut in the middle of a solar flare, right? A solar flare that lasts years or a solar flare that lasts weeks. There's increased radiation out there, there's heat, right? You're struggling. This is the toughest time for you to become an astronaut. And you're saying, this isn't for me because you're doing this at a tough time to do it, right? So give yourself grace, manage what you can manage, and your mental game has to be tight. It has to be tight. You have to stick to your system, cut things that aren't working. Don't average down on things, right, that aren't worth averaging down on, right? Make sure that you are picking your battles selectively. You need to be cutting at 40%. If you're not cutting at 40%, you need to be averaging down if the move is still there, right? If the reason why you enter the trade is still there, then sure, you can average down. But overall, it's better. You're better off repositioning than averaging down. Don't, bank on, had a conversation about strangles, right? Strangles, not something to do right now where you just buy calls and buy puts and you just take profit on whichever one works, right? At this point, you want to just wait for the direction, right? If you're not scalping intraday, meaning you're taking quick day trades, then you want to wait for solid setups, right? Like yesterday, PLTR was a solid setup, right? Palantir, it was a beautiful classic post earnings play setup that you can put real money behind. All the other scalps throughout the day on QQQ, on SPY, when we're chopping and then we drop a bit and then we're going down a bit and then we push up, right? You can trade those, but those are going to be quick. If you're not at the level to trade that yet, then just wait for the solid breakouts that and that you're, used to. But the issue really is that what happens is we get into this negative feedback cycle where we take a trade that a lot of times, like let's say we take a trade that we shouldn't be in, right? It's not time for you yet to day trade, but you day trade, right? You scalp, you get into a trade where you're like, okay, I shouldn't be in this, but I'm in it. It doesn't work out because you're not ready for that yet. So what do you? You're more tentative now. The next trade that comes along is a high probability trade. It's not a little scalp trade. This is like PLTR, right? We have a great setup. We love playing that setup. Awesome. You're scared to execute because you lost the last trade. So what do? You miss out on it. So there's another opportunity to get in. So what do? I'm not going to miss this one. I'm going to get out. I'm going to get in, right? But then that opportunity doesn't work out because we've already run a bit. So you see how it happens where you get caught in this negative feedback cycle where you're off beat with markets. If you ever watch Dancing with the Stars, you can tell when someone isn't on beat with their partner, they struggle. You've got to get on beat with markets. And what that takes is you sticking to your system and sometimes you saying, okay, what happened here? Like not just saying, okay, I got burned. Why did you get burned? Did you get burned because you did something you weren't supposed to do? Or did you get burned because you weren't adhering to your system, right? Answering those questions helps you when it's time to make your next trade. Because if I entered a trade I wasn't supposed to be in and it didn't work out, okay, cool. I'm not going to hold that against myself because I shouldn't have been in that trade, right? That doesn't speak to trading in general. I should not have been in that trade because that wasn't for me. I'm not there yet. But when you see a setup that you're supposed to be in, you don't then say, okay, the last thing that wasn't for me didn't work out. So what is for me won't work out as well. Because then you'll miss it. And then you're jumping into the next, right? So it's really, again, mindset is everything in this game. Breaking out of negative feedback cycles is everything in this game. Don't just, every losing trade is not the same, right? That's why you have to autopsy it. You have to go through and you have to take inventory of your trades and you say, lock in camera, right? You have to go through each and every trade, journal it and say, what happened with this trade? All right, I have no patience for you. Come on, get in. There we go. You have to say, okay, what happened with this trade? Why did it not work? Should I have not been in it? Okay, cool. I'm just going to write that off. And I'm only going to get in trades I'm supposed to be in. That's how I solve that. But I'm not going to hold that against myself, right? Because when you do, you don't enter the trades that you should be in. And it gets exhausting, right? It gets exhausting. So have grace with yourself during this time because this is a very, very, very tough time for markets. We've been chopping for a month and a half, right? A very, very tough time for markets. Have grace with yourself. Only take the setups that you should be taking. Have the correct expectations from the market for where you are at and execute when necessary. Also, you want to go deep instead of going wide. Focus on the strategies that you are learning, right? Whether that's just trading the trend and you buy at, trend line support or trend line resistance. And then, you're trading breakouts, right? Maybe you only pick a few patterns and you trade those patterns on the hourly or on the daily. Focus on those, right? But don't try 100 different things saying one of these things have to work. A lot of things don't work in a choppy market, right? A lot of things don't work. So focus on one thing, two things, one ticker, two tickers, trade those, call it a day, right? Go deep, not wide. You trying a bunch of different things instead of perfecting one thing will only further lead to burnout, right? So this was kind of just, something that was on my heart that I felt that was necessary to voice because, it's tough to get on the right beat, the same rhythm as markets, but it's just so important to give yourself that grace and not just say, okay, I've struggled, this month for a month, 2 months, whatever, could be 3 months, 4 months, I struggled. That's going to happen, right? That's going to happen. But don't let that determine your outlook on markets or your ability to succeed in this, because any other thing you try, you're going to struggle for the first few months, right? Same thing with walking, right? You're a baby in markets when you first enter them. You're going to fall and you're going to fall and you're going to fall. But do you learn from that, right? That is on you. If you don't learn and you keep making the same mistakes, then you have to look internally. And that's when you need to go and do like a Rich Minds or something like that, because you're making the same mistake and you know that you're making that mistake. So if you can't help yourself, that is a whole mindset issue that you have to tweak outside of markets, right? But that's why, again, it's so important to keep that mindset tight, because if you can't control yourself outside of markets, it'll be very tough to control yourself in them, right? So that's kind of my spiel. Throw a 3 in the chat if you got anything positive from that. But I just think that people don't understand it. Like that is so much more important than actually placing the trades themselves, right? Because you'll just go on making money, losing it, making money, losing it, right? And you'll get burnout and you'll blow up accounts and this, that, and the third. You got to make sure that you're building in a way that is sustainable, right? And again, just spending a few months and saying, okay, I've struggled, this isn't for me, it's not the right way, because there's nothing that you're going to do and you're going to get it in a month or 2 months. Nothing worth doing you're going to master in that time. And if you ask anybody who does this and does it for a living, it took them time in order to get better, right? So top news today, of course, is going to be our inflation update. So April's consumer price index, to be released at 8:30 a.m. Eastern Standard Time, will give economists and policymakers fresh data on whether the Fed is succeeding in bringing down the rate of inflation toward its 2% goal. March's CPI showed inflation receding for 9 straight months, quote, after the Federal Reserve awoke to the reality of high prices and began hiking rates in March of last year, said Bankrate senior economist Mark Hamrick. Also, CY Seeking Alpha investing group leader Daniel Sarita expects that the consensus estimates for April CPI may be too optimistic and could lead to the repricing of forwarding fund rates. Now, by the numbers, with core CPI rising 5.6% year over year in March, inflation has ebbed from its peak of 9.1% last summer, but remains well above the Fed's 2% goal. The April number is expected to show little, if any, progress, with economists expecting the headline CPI to rise 0.4% in April, up from 0.1% increase in March. On a year-over-year basis, that comes to a 5.0% rate, unchanged from the prior month's rate. Core CPI, which excludes volatile food and energy sectors, is also expected to increase 0.4%, unchanged from March month-over-month increase, with a rise of 5.5% year-over-year versus the March print of 5.6%. So the Fed shifts to a meeting-by-meeting approach for its rate decisions and insists that the data will inform those choices. Each economic data point could spark market volatility, wrote Mott Capital Management's Michael Kramer. Quote, the CPI swaps market forecasts a significant drop in inflation between now and June, with the year-over-year rate of change falling to around 3% and remaining between 3 to 3.5% until the end of 2023. This makes the April number somewhat crucial, as the swaps market has generally been repricing inflation rates higher throughout the year. Now, in terms of outlook, another big Fed consideration is the renewed volatility hitting the banking industry. Regional bank stocks continued their whipsaw action on Tuesday as concerns about deposits continued to unnerve the financial sector. Lots of fingers have been pointed at short sellers, putting regional banks under undue pressure since the collapse of SVB, and has even prompted talk about whether the SEC should halt the short selling of regional bank shares. The regulator banned short selling on more than 1,000 banking stocks in 2008, but is such a drastic move likely in this scenario? Now, in terms of global, you are nervous, right? If you are a small account, don't swing through this data, right? Don't swing through data releases, because you could get quite literally anything, right? And any prediction that, any, analyst makes or bank makes or anything like that, that does not matter, right? You can try and gather as much information as you want. At the end of the day, the data will be what the data will be, right? So I've spent so much time trying to kind of, predict. Don't spend time trying to predict, right? Just react to what happens and you'll be good, right? but overall, you're burning mental capital that you don't need to burn, and it leaves you, kind of just absolutely ballooned, at the end of it, because you're just trying to expend all this energy on something that you have no control over. And you always want to control what you can control, per yesterday's reel, right? Now, in terms of CPI data, U.S. April consumer prices up 0.4%. Consensus was 0.4%, so exactly in line with expectations. U.S. April consumer prices increased 4.9% from year earlier. Core CPI up 5.5% over a year. So it looks like CPI energy prices are up 0.6%, food prices unchanged. Yeah, and those are really the main things. It looks like, on that news, we got the Nasdaq up 0.4%, S&P up 0.3, Dow up 0.2. Whether that holds will remain to be seen, right? We've got to see kind of what ends up coming about as a result of that. But we've got the Nasdaq pushing off that. We've got SPY pushing off that, and that's why, again, it's important to just let this data come out, right? Let the data come out and then react based off of what we get. But overall, no need to kind of place your bets heading into data, because you don't know what we're gonna get, right? So you always just want to be ready and stay ready, so you don't have to get ready. Now, in terms of kind of further news moving forward, and of course here with SPY, right, as we're looking, we got SPY testing that previous hourly high at like 413.72. We hold over that on the hourly, we can continue to push on SPY, right? SPY has been showing weakness on the hourly, been showing weakness over the course of the past few sessions, right? We have 4-hour bearish divergence, hourly bearish divergence, right? So we can continue to pop and drop and all that good stuff, but overall, right, we've got a potential hourly bull flag that's firing here on SPY on the hourly and the 4-hour. So pay attention to that, right? That 413.72 level is going to be important as we head into today. If we hold above it, SPY can rock it. If we hold, if we don't hold above it and we go beneath it, we can top out and fall right back down, right? So that level is going to be the crucial level for today. That 413.72 on SPY going to be very, very important. In terms of, let's see here, our next bit of news, we've got Italy ducking out on China, right? The official title is Belt Gets Tighter. So it has been a controversial investment pact ever since the deal was signed in 2019, but Italy is reportedly ready to pull out of China's Belt and Road Initiative. The country is the only G7 nation where part of President Xi Jinping refers to as the only G7 nation part of what President Xi Jinping refers to as the project of the century, or what critics call a debt trap designed to create political goodwill and cement Chinese influence on the world stage. Like much of Europe, especially after Russia's invasion of Ukraine, Italy has found itself caught in escalating tensions between the US and China with regard to trade, investment, infrastructure, and sensitive technologies. The potential would have profound effects on some of Italy's largest companies, as well as other investment decisions like using executive power to limit the influence of a major Chinese shareholder, Sinochem, on tire maker Pirelli. So overall, right, we just see, again, people picking sides. People don't pick sides when there's no conflict brewing. War seems all but imminent between the US and China at this point, and you have nations that are choosing sides. There are some nations that are saying, hey, we're not getting in between this. They wouldn't feel the need to say that unless it was absolutely necessary, right? You don't feel the need to say, hey, I'm on this person's side or I'm not on anyone's side unless people were picking sides, unless there is conflict brewing. So there is definitely conflict brewing. In Italy pulls out of China's Belt and Road Initiative. So I guess that's their version of saying, hey, we're with the US, right? Or at the very least, we're not with you guys. And that's, kind of what this says to me. But overall, it just speaks to with China if we aren't already. Now, in terms of media news, going after everything, industry rivals are watching as Twitter continues to take steps toward becoming an everything app. Elon Musk has revealed that new features like voice and video chat will be coming to the service, as well as encrypted direct messages, bringing the platform in line with other social media offerings like Instagram, WhatsApp, and Facebook, who are all owned by Meta. In a quest towards becoming a super app, Twitter recently inked a partnership with eToro that'll let users trade stocks and crypto. Though the bigger fish range from payments and shopping to financial services and entertainment. Yeah, so let's see here. Speaking of the latter, ousted Fox News host Tucker Carlson announced he would relaunch his show on Twitter, which will help boost the platform's content creator community via subscription revenue and advertising. So I did see that yesterday, Tucker Carlson saying that he'll be on Twitter. I'd say it's a big win for Twitter, regardless of what you think about Tucker Carlson. He has a huge following, right? And attracting that star power to Twitter is going to be key to, kind of the turnaround here at Twitter. But yeah, I think that Musk is very serious about his goals to make Twitter an everything app. He wants you to buy things through Twitter, invest through Twitter, take your media in through Twitter, voice your opinion through Twitter. He wants you to do everything there, right? Because if he can keep your attention in the same place, he can monetize that attention, right? And that's what he recognizes. So he's trying to make sure that you're on Twitter as much as you can be, as often as you can be. And this is his kind of quest in order to do that. So I think it's, I wouldn't bet against him. I wouldn't bet against him. That's for sure. Now, in terms of events here, we've got the Sohn Investment Conference. That's ASOHN. And let me check on the chat here right before we dive in. All right, awesome. Yes, so cool. Just trying to make sure that everything isn't crashing and burning here because sometimes I'll go off reading and, like Vivian let me know, hey, Adam, you're reading from the newsletter from last week. So I want to make sure I'm checking back in since y'all keep me right? So Sohn Investment Conference, while he's not predicting one, hedge fund investor Stan Druckenmiller sees the potential for a 2008-like recession or worse. A hard landing likely includes a 20+% decline in corporate profits, unemployment going above 5%, and increases in bankruptcies. He explained that at the 2023 Sohn Investment Conference. Quote, it's naive not to be open-minded to something really, really bad happening. Again, it's not my forecast, but as a risk manager, it has been part of my matrix and equation thinking about it. Regarding stock prices, at the conference, Greenlight Capital's David Einhorn pitched German auto parts supplier Vitesco Technologies, while more recognizable names including Sony and Mirati Therapeutics and others. So, I mean, what else? What else is new? Another guy giving their take. This one is bearish. People give their take. Some are bullish, some are bearish. At the end of the day, what matters? You being able to evaluate that for yourself, right? We've been chopping here for a month and a half for a reason, right? We were pushing up to start the year, and then we've had some struggles, right? All this isn't happening, for no reason. It's because the market is figuring itself out. And again, we're at a spot where if we don't get over this 418 level on the weekly on SPY, right, we have a weekly double top that is possible. If you did not see yesterday's reel, go back, check it out, right? Drop a 5 if you watched it, right? You're part of Get Some Community. You watched it. Watch those reels and let me know that you're watching them. I take a holistic approach to education. You're going to learn some from the reels. You're going to learn some from the Premarket Prep. You're going to learn a lot from the Q&As. You're going to learn some from being in the Facebook group, right? Make sure you're taking in all of this information because it is all key, right? So especially my Get Some people, I need to know that you guys are seeing it. If you're in Get Some, you see a reel, you understand what's going on in that reel, drop a 5 in the comments. Let me know that you're understanding what's happening because I get questions, and people are like, hey, what is this? Or how should I think about this? Or da-da-da. And then I'm like, hey, just made a reel about it, right? With tons of cool animations. Go check it out. And they're like, okay, cool. So everyone gets dropped each and every day. At the end of the day, right before you tuck in, you give wifey a kiss, you can roll over, check a reel, right? Okay, cool. Learn something. It'll get, deeply ingrained in my subconscious as I sleep now. But just take that information in because it's all important. Even if you think it's something that you've heard before, I've had some of the most profound realizations listening to a piece of content or a teaching or a mastermind or a session, right? Where I just, there might be one thing that I want to learn from somebody. Oh, hey, you trade the open of the market really well. Or, hey, you trade earnings really well. Can I give you $500 for 30 minutes of your time, right? And the majority of what they say might not matter to me, right? You can have experience, you can have this, but there's that one thing that they say, right? Can I give you this much for this much of your time? Can I give you this much for this much of your time? That will come back to you tenfold. And I think that's what it's important to realize, right? Have I spent a lot learning from people where the majority of what they said I knew, but one or two pieces of information changed something for me? Yes. And I do it again because that $500 I spend with them, right? Hey, I just need a half hour. I just do this. And most of the time they'll give you more than that time, right? I did the same thing for my people. It's most of the time they'll give you more than that time, but it's important to recognize that, hey, like that thing you might hear one thing or one piece or one strategy, right? Where you're like, okay, wow, I can implement that and make a ton, right? That goes for the same strategy that we used yesterday, right? The same strategy that we used yesterday in PLTR, right? PLTR, this was something I came across that post earnings strategy, some time ago. And it was something where I was like, man, I had never looked at it that way, but I tried it a few times and I was like, holy crap, this thing works, right? So now I've made thousands of dollars off of that strategy, right? Made great money on PLTR yesterday. what that cost me to sit down, I made tons back, right? So I think that's what we have to focus on is really the tiny bits of information. So when you watch the reels, when you listen to the pre-market prep, don't just do it passively because you might be missing a little bit of information, right? And I know some people in here have already, had that kind of breakthrough, right? Coco, our one-on-one, Benjamin, you hit me up, a lot of times, Vivian, you hit me up a lot of times saying, hey, Alicia, right? This one piece of info was really big for me. Thank you, right? This one piece of info right here was really big for me. As you grow and as you learn, it's not going to be the, hey, here's the world-changing advice. It's going to be out of this basket of food that I get from you. There's like one piece of A5, filet mignon, or there's one piece of A5 Wagyu, right? Where I'm like, okay, boom, that made it all worth it, right? That made it all worth it. You're not going to look at something and immediately say, okay, Adam, I understand that, I have to do this when I'm trading. But listen to that. Listen to it because there might be a piece where you're like, oh, I don't do that. And if I did that and you start doing it, you're like, wow, I found consistency, right? I'm starting to hit my monthly goals. I'm starting to do this. It's the tiny things in this trading game. Everyone thinks it's going to be the big life-changing indicator, this, that, and the third. It's not. It's the tiny things that fill the cracks, right? When you're trading, you want to be like a well-oiled machine, or you want to be like a ship, right? There are cracks to let water in the ship. You need to be aiming to fill cracks, not build new ships, right? And I think that's what's very important is that, especially in life now, with us having the ability to get everything, right? Alicia said that reel was so valuable. Yeah, it's like it's very important in life now. I feel like we're taught to something doesn't work, move to the next thing. If this strategy doesn't work, move to the next thing. No, nurture what you have, right? Your marriage isn't working, get a divorce. Nurture what you have. Some people they shouldn't be together. That's true. But you want to exhaust all options before we move on. It's a lost art nowadays to exhaust all options. Really hone in on what you're doing. Hone in on one thing, two things. I said it earlier. Hone in on one thing, two things, and just go hard at that. Fill in the cracks, right? Because you jumping from one cracked boat to another cracked boat is not going to solve the issue. Because a lot of times, mindset issues, adhering to a system, doing what you need to do, following those rules, that is universal no matter what you indulge in, whether it's trading stock options, crypto, whether it is, working at your job, whether that's starting a business. There are oftentimes the same fundamental reasons why that is not working, right? So if it's a mental thing, you have to identify that and look to fill the cracks. Because if you just move from one thing to the next and you're constantly running into issues, it helps you to realize, okay, there are some cracks that need to be filled in, maybe within myself, right? And then within the system that I'm working in. But focus on the cracks, right? Not building say that we are probably all green across the board now. We are, at least in the major indexes here with SPY, the Dow Jones, the NASDAQ, all those good guys. So I'll skip over that. Bitcoin was flat at the time. If I had to guess, maybe it popped, as in relation to the inflation news, but it was down around 27,600. In terms of today's economic calendar, the big data, of course, was CPI, which we got at 8:30 a.m. We got Atlanta Fed business inflation expectations at 10. Nothing really big other than the CPI data, right? So the big thing today is just going to be, how does the market react from the CPI data? Do we break out on SPY, right? Do we break out and do we hold? We've been weak. We haven't been able to hold breakouts. We've had fake outs this week, right? What was that, Monday? Today is what, Wednesday, I think? Yeah, Wednesday. Today is Wednesday, right? Monday, we had the QQQ finish above daily resistance. It was on incredibly low volume. Yesterday, we had even lower volume than the day before, right? So you want to look to see if we get volume today, right? Do we get moves that hold, which is indicated by the volume? You want to make sure, right, that we are focused on kind of how does the market digest this information? And it might not be the first move that is the move that lasts, right? Maybe we do pop above resistance and then we get back beneath it, right? But again, give yourself grace, ease into positions, average up once you're in the position. People sleep on averaging up. They think, oh man, I missed it. Now I just have to wait. No, there's plenty of times when I've gotten in a position, it's working and it's fulfilled and I get more at a higher price. There's nothing wrong with that, right? I feel like everybody focuses on averaging down. What about averaging up? You got in with one contract and it worked out. It held the breakout it needed to. Why are you sitting there just like, oh man, I'm only in one? Get another one, right? Have you reached the price target? No, get another one. Get two more, get three more, right? On Palantir yesterday, I averaged up several times on the way up, right? You get in with 7 contracts, right? Oh, this is working out. 3 more. Oh, cool. We're still 3 more, right? You can average up. You can average up on a winning position, what you are secure in that position. So with SPY, right, if we hold this hourly breakout above whatever it is, 413.72, Let's say you get in calls, at open, right? If we don't immediately fall back beneath it, let's say we get in calls at open and then we end up holding. Get more calls. Don't just sit there and say, oh man, I've only got one call. Whatever will I do? Get more, right? Get more. So you can, I feel like you have to recognize that you have a lot more ability than you think in this game. So use it, don't just sit there and say, oh man, I'm missing out or da da da. Of course, adhere to your risk rules. You don't want to be full porting things and meaning your full portfolio is in things and that type of stuff, right? You still want to adhere to your risk rules, but don't sit out and say, oh, I'm only going to take a small win or wait for it to run all the way up. And then you say, oh, you know what? I know we took the time to retrace and I could have gotten more, but I got scared when we retraced and now I'm up 40% and I want to get more. That again is a mental thing. Trust yourself, trust the setup, execute, right? Execute. Sorry, I'm talking so much and so passionately. I got my phone running out of my pockets. But other than that, we're going to finish up here with our rapid fire bullet point rundown. So Biden says debt meeting is productive. McCarthy doesn't see movement. So I guess, toward the debt ceiling and all that stuff. Still at a stalemate as of right now. Survey results on whether emergency procedures may resolve debt crisis. Paramount, ticker PARA, P-A-R-A, to cut 25% of workforce across entertainment units. IBM, ticker IBM, unveils Watson X, a new generative AI platform. Cool, right? Might be nice for IBM. Airbnb, ticker ABNB, slides 12% after Q2 outlook disappoints. Sale of Manchester United, ticker Man U, gets closer to conclusion. Rivian, ticker RIVN, on track to produce 50,000 vehicles in 2023. I think that's better than expected. So Rivian probably up off that news. That I assume that was part of their earnings report. Twilio, ticker TWLO, plunges as sales forecast falls short of expectations. Then free shipping, Amazon, FedEx, and UPS continue to tighten delivery options. Now, retire comfortably. Leo Nelson flags 7% yielding dividend gems. Awesome, but at the end of the day, 7%, not really too appealing to me, right? When we have 1,000% plays out here being made. So I'll focus on, hitting the base hits and the home runs, but 7%, yeah, I'm gonna need a little bit more than that. Overall, though, guys, this wraps us up here for the pre-market prep session of May 10th, 2023. We went over a lot of important things. We went over specific levels for today. We went over news that's relevant for the future, right? When we talk about China, when we talk about Musk with Twitter, we went over news that's relevant for the now. We went over news that's relevant in terms of your trading and your mindset, right? There are a number of nuggets that were dropped. Make sure that you're taking all those in, right? Watch the reels, watch the YouTube shorts, take that in and say, okay, cool, I'm understanding these bits of information, because there's tons of little bits of information that can absolutely change your life, but you have to give it the chance. You can't just say, oh, I've been trading for 6 months. I don't need to hear what Adam has to say about adhering to your system, right? Or about controlling what you can control, because there could be one sentence or a few words in that where something clicks and boom, right? It's changed your life. So with that, everybody, make sure you have a great rest of the day. I'm excited for what this day has set up for us, right? Excited to finally get some movement. If we do get some movement, they could just completely fake people out and continue to shop, but we'll see. We will be patient. We will remain patient. We will execute when it's necessary. We'll continue to bring home the bacon, right? So have patience with yourself, have grace with yourself. You got 1% better by being part of this session, so be proud of that. I appreciate it. For my guys in the Facebook group, my people in the Facebook group, I do have an appointment today, I think at 2. So I'll be on the road for like 12:45 to 2. Hope to be back by power hour. Hopefully the market doesn't act up. Typically it does like to do that whenever I'm on the road, but we'll have our, outlook and be ready to execute from then. But otherwise, you guys have a great rest of the day. I'll see you back here tomorrow for our next pre-market prep session. Have a good one.